Hey, what's up, guys? Welcome to another video. And today I'm going to be going over liquidity in forex trading from a smart money concept perspective. And okay, let's get into this. Okay, so for those who are new to liquidity, I'm going to be giving a support and resistance example. So in retail trading, what it usually is price has support and resistance. Okay, that's the retail perspective. That's the retail concept. There's support and resistance. So whenever a lot of retail traders see this in the market, they believe this is a strong level, this is a support level, and this as well is a strong level, which is a resistance level. But most of them don't actually know they are creating liquidity for the banks. So they tell you where you see price, retesting the same position, that simply means a support on the bullish level. Why on the bearish level? If price keeps resisting to go bullish, that is a strong level. But a lot of retail traders are actually ending up creating liquidity for the banks. Okay, so let's say you are irritated to the right. So if you want to take a buy, let's say you want to take a buy, this is where you're going to enter your buy. Let's say you leave about 10 to 20 pips. Okay, you put your TP right here, and this is how you're going to enter the trade as a retail trader. Okay, but the thing is, the banks, they are always looking for a way to stop people out. So let's say you're going to get into this trade and you're going to risk about $10. You're not the only one actually risking money into this kind of trade. There are millions of people actually risking money into this trade. So there are millions and millions of stop losses at this particular area. So what those banks do is they have the funds, they have the money, they are able to manipulate the market. Okay. So most of the times you're gonna see price, let's say price is on a bullish trend. You're gonna see price come all the way down, tap out every single person who have entered in this position. Okay. And price will let it go all the way up, tapping out every single sellers as well in this position. So there are buyers in this position. The institutions are going to tap them all out. There are sellers in this position as well. The institutions are going to tap them all out. So it's very simple. It's all manipulation. Now, before I go further into this, we have to talk about the three main market cycles. So we have three main market cycles. We have the bullish expansion. We have the expansion. So price is on a bullish trend, right? Price keeps going up and keep retracing, keeps going up and keep retracing. This is a bullish expansion, right? We also have the bearish expansion. Price is just coming all the way down. Price is just expanding all the way down. Now, this is the second market cycle, and we have the consolidation. Price is in a single position for a very long time. Price is just consolidating. Price is just consolidating. So a lot of traders do get caught in this kind of consolidations because it's actually manipulation by the banks. A lot of people think, the reason price is going up because there's a bigger demand. The buyers are pushing the price up. The reason the price is going all the way down is because the sellers are pushing price up. That's not actually how it works. Okay, it's the banks, the institutions, the hedge funds, Wall Street. Those people have billions and billions of dollars they can put into the market to influence the market. So they actually manipulate the market trying to stop people out. Because when they stop people out, okay, let's say you have okay, like I said, let's say there are billions and millions of people who have entered a buy position in this section. So if they're actually going to make money, they have to look for a way, to stop people out. So let's say you enter a buy and the banks go for a sell. So you're going to get stopped out and they're going to make money. It's very simple. So most of the time, liquidity is all about manipulation by the banks. Okay, so now I'm going to be showing you a real life example on the USD. Let's go to the charts. Let's try to look for an example of liquidity. Okay, now this is your USD, right? This is the 1 hour chart, and as you can see right here, this is a very good example of manipulation, a very good example of liquidity. So you can see this section right here, there was a lot of buying pressure, right? And in this section as well, there was a lot of selling pressure. So from the retail perspective, this is actually the support level. So what I teach a lot of people in retail, that if you see a support level, you enter into that support level. So you just enter into the position. So you just take a position right here, and you just add about, let's say, 10 pips or about 20 pips, and set your TP right here. They don't actually aim for much risk to reward ratio, and this is how they enter the trade. But the thing is, they don't actually know they are being manipulated by the market. Okay, so as you can see, there's a lot of buying pressure on this level, and there's a lot of selling pressure on this level. So as you can see, people are actually trying to sell on this level, this as well, and this as well. So this is the resistance. So people are trying to sell, open for price to go all the way down. As well, people are trying to buy this level, on this level as well, and this level, and this level as well. So there's a lot of manipulation going on, right? There's a lot of manipulation going on. So what the banks are seeing right here is a way to stop people out. So you having the retail perspective, you're trying to, get into the market. You see this is a strong resistance level. Okay, so you believe price is going to go all the way down. And some other people that are looking for a buy, they see that these levels are actually a strong support level. So millions and millions of people are entering into this level, on the support level, and on the resistance as well. Millions and millions of people are actually entering into this market. So there are billions and billions of stop losses. Okay, so you enter $10 into your position. There are some people who enter, $500,000 into the position. There's some people who are risking $1,000. So there are millions and millions of people. So there are billions and billions of dollars actually resting in the support level and in the resistance level. So now what the banks are looking for is a way to stop people out, and you can actually see it playing out. Okay, let's do this right here. Okay, so you can actually see price, price. By the way, price is on a bullish momentum. Price has been on a reversal. Price came. You go onto the higher time frame, like the daily time frame or the weekly time frame. You see that price has been going all the way down. Price has been coming all the way down. Now price is on a reversal, so price is on a bullish momentum. So price is definitely going to go all the way bullish. But this right here is this section right here is all manipulation. It's a way to manipulate the retail traders, a way to stop people out through manipulation. Is very simple. Okay, so now let's try to have a pattern right here. Okay, let's try to draw a pattern. Now price came all the way up, right? Went down, went up, came down right here. Try going up, came all the way down, went up, came all the way down. You'll see a lot of manipulations. Price went up, price went down, price went up a little bit. There was a sudden impulse move all the way down before price started going all the way up. Okay, so what actually happened right here? The big banks, the market makers, those in control of, those in charge of manipulating the market, you can see they push price all the way down. Okay, let me delete this right here. So you can see they push price all the way down, tapping out all the buyers in the section, tapping out every single buyers on the support level, and they push price all the way up, tapping out every single sellers on the resistance level. So it's very simple. This is just a basic liquidity concept. This is one of the most fundamental liquidity concepts in SMC. So retail traders most of the time are being, manipulated by the banks. And it's very sad, really. It's very sad. A lot of retail traders, they don't actually have any idea what's going on. They see price, goes all the way down. So they think price is on a sell. They enter a sell, and all of a sudden price started going all the way up. And they're really, really confused on what to do. They don't actually know what to do. But people like us, people who trade SMC, we actually know what's going on in the market because we are reading the market structures. We're not just looking into patterns and looking how to enter into the support level or looking how to enter into the resistance level. We are trading like the banks. We follow the movement of the banks. That is why we are smarter than the retail traders. So it's very simple. Now let's say you want to get into this trade, right? Let's say you want to enter into this trade. So how do you enter into this trade? You enter into this trade using a order block. So immediately price goes all the way down. So price is definitely going to go all the way up because like I said, on the higher time frame, price is on a bullish momentum. Okay, so price has been going all the way bullish, right? So price is definitely going to keep going all the way bullish, right? So it's very simple. So immediately price had a sudden impulse move downward, price is going to keep going up. So you have to look for a way to enter to the market using a order block. So how do you get into this market using an order block? You wait for a break in market structure. So when you take a look at this move downward, right? So from this support level all the way down, you have to look for a break in market structure. Now, whenever I want to enter the market, I don't really use ICC's break of market structure, but this right here is an example of ICC's break of structure. Okay, so price, you can see price came, let's have a pattern right here. Okay, let me do this. So you can see price came all the way down, price went up, price came all the way down, and there was a sudden impulse move upward, right? This is a gap. This is an imbalance. So price went all the way up and broke structure. Then price came down as a form of retracement and price started going all the way bullish. Now, if you're going to get into a trade, you simply use this order block right here. This black candle right here, this B candle right here. So this order block is going to be your entry. Okay. this order block is going to be your entry. So it's very simple. So you see retail traders, losing money sideways. Those that are trying to enter to buy, they get stopped out. Those that are trying to enter to sell, at the end of the day, they get stopped out. But you as a smart money trader, you are safe because you know how the banks work. You know how the banks manipulate 99% of retail traders. So it's very simple. Now, if you're going to get into this trade, let's try to set a position right here. So you're going to set your position. Let's set a position. And in order to actually get a TP, we have to go on to the higher time frame in order to get a bigger perspective, right? So let's go on to, say, the daily time frame. So you have to have a bigger perspective, right, in order to know where to set your TP. You don't just set your TP just anywhere you like. You have to, find a definite level where you're going to set your TP. So it's very simple. Now, if you take a look at the market structure on the higher time frame level, this is a 1-day time frame, by the way. So you can see, even on the higher time frame, even all the daily time frame, let's take a look at this. This is manipulation, right? So this is a support level, right? This is a support level, and this as well is a resistance level. Even on the higher time frame, a lot of people are actually getting manipulated on the higher time frame. So this is a support level, this is a resistance level. A lot of people who think price is going to keep going all the way up, they think this is a very strong level because they're being taught that this is a support and resistance level. When you see a support level, you actually enter into the buy. And those who think price are going to keep going all the way down on the higher time frame level, they have entered using the resistance level. So as you can see, it's very crazy. This is the higher time frame and manipulation is actually going on. So you can see this right here, this 1, this 2, this 3, this 4, 4 different positions. And there are millions and millions of people actually get into this trade. It's also the same thing, on the support level. You can see a lot of, let's have a closer look. You can see a lot of positions actually resting in this level. You can see there are so many positions, right? There's so many positions, and this is on the higher time frame. This is the daily time frame, so it's kind of crazy. So you know for sure that price has come all the way down to tap out every single trader on the support level, and price is definitely going to go all the way up to tap out every single seller on the resistance level. So there are buyers who have actually gotten stopped out, and next is going to be a seller. So price is definitely going to get up onto this point. So this is going to be your TP. This basically is going to be your TP, right? So price is going to go all the way up to this position. Now, if I take this right up onto this point, so you can actually see this is about 1 to 21 risk to reward ratio. So it's actually crazy, right? It's actually crazy. Just using the liquidity concept, it's actually crazy. And mind you, our entry is on the 1 hour time frame. You can actually use this as a form of bias and get into the market and see multiple trades. You don't actually have to enter into this trade alone. You can basically use this as a form of bias because price is definitely going to stop out every single sellers who entered at this resistance level. So it's very crazy. This is one of the most fundamental form of liquidity concept in smart money concepts. So basically, after watching this video, you can just go to the charts and just backtest, go to your USD, go to pounds on whatever currency you're trading, whether it be gold, whatever US30, go back into the time frame, go back to the charts. You're going to find a lot of manipulations. You're going to see price, expanding, consolidating, expanding. Right now, price is on the consolidation. This is an expansion. You're going to see price expanding, consolidating, manipulating retail traders. Most of the time, they're always going to get confused. But you, as a smart money concept trader, you know how the banks work. You know when the banks are moving upward. You know when the banks are moving downward. So it's very hard for you to lose in the market. So again, it's very, very, very simple. You just have to follow the banks. You don't need to trade from a retail perspective because 90% of retail traders actually end up losing their money. But if you trade using the smart money concept, if you trade like the banks, you're going to be unstoppable. So it's very, very, very easy and basic to understand liquidity on the smart money perspective. Okay, this is going to be the end of the video. If you have any question at all, you can ask in the comment. And if you haven't subscribed, please be sure to subscribe to the channel so you can always get more content like this. Thanks for watching this video. See you in the next one.